Hey everyone, it's your favorite real estate agent in Las Vegas, Robert Steim, Keller Williams Realty, the Marketplace, Steim Realty Network. Hey, we just wrapped up the month of March and we're in the second week of April here, but what happens is we generally recap the numbers every month, and my office actually puts together these really nice charts and graphs that I think are helpful, and they really illustrate what's going on and how we tend to use this sort of thing to explain to clients who don't watch us every day. I mean, this is what I do every day, all day, every day. So the average person maybe sees some stuff on the news, doesn't really keep a close eye on the trends, and then maybe talks to friends and family members, coworkers, and has a misconception what's going on in the market. So anyways, this is, real data, and a real estate professional maybe helping interpret what this means, and then looking at that through the lens of a potential buyer or seller and what this means to you and your situation. So anyways, for the month of March, I wanted to get into this real quick. So if we look at the median price of homes over the past year, so we're in April now, we go back to last April to current, we are looking at the prices about a year ago were $436,000, kind of peaked at $445,000. This is the median price. And then that's really when the interest rate started to tick up on us a little bit faster. And people kind of started to pump the brakes as far as the prices getting higher, interest rates getting higher, which means payments got a little bit higher, which means affordability got a little bit more difficult for the average buyer. So we did see some slowing down. We saw some pricing coming back down. So you can see the next several months resulted in a little bit of a decline, just a little bit of recovery there, but right back down on the trend downwards. And then as we headed into the end of the year, we kind of bottomed out, which honestly, November, December, January, it's typically slow for real estate. People are not really interested in moving a whole lot. They're focusing on the holidays and family, friends, whatever. And it's just not a time where people are looking to up and move usually. So it's pretty normal for us to kind of bottom out for a couple months there. And what I do think is a little bit interesting, though, we saw some correction. So if we're going from, let's say, 445 to 385, I mean, that's 60,000. That's pretty significant. That's about maybe 15%-ish. But if we look at that, we've started to see the last couple months starting to trend back up. So usually we're heading into the spring and summer buying and selling season, and we're seeing the current momentum starting to creep back up with interest rates, being pretty stable. They haven't changed a whole lot. So as far as interest rates go, this might be our new normal. I mean, it's 5.5%, 6.5%, somewhere in that range is pretty good still historically, but it's a little bit more average. We were maybe spoiled over the past several years getting into that 3% range. But as people get used to that, they might get more comfortable with their new budgets and the pricing of home and what their new payments look like. We're just going to have to kind of see how that goes. So if we shift from price to units sold, this just is as what we use as far as activity. So we're talking about the number of units, number of properties changing hands, and what does that look like? So this is a pretty typical as far as just the shape of it. Spring, summer, we're usually a little bit busier. Heading into the summer, it does get pretty hot here. So sometimes we do see a little bit of a taper off of the activity. I mean, 110 degrees. Can't blame people that maybe aren't super serious about shopping for a home, but when kids are out of school and people are comfortable moving, they usually do most of their moving in the spring and summer. So that's why you see this activity pick up. And then as school gets back in session, heading towards the holidays, things slow down. And then after the new year, people start to ramp things back up. So anyways, this pattern is pretty typical. We won't focus on the numbers too much on this chart, but for the past year, I just wanted to share what that looks like typically, and that it was a pretty normal year as far as that goes. And then as far as the median price goes, if we go back a little bit further, let's say January 2021, I really think this illustrates how big and crazy this run-up was. We went from about 320 all the way up to 445. So, I mean, that's like $125,000 difference based on 319. So I don't know, that's like 35+% appreciation in a little bit over a year. So that's not sustainable. I mean, we can't just expect properties to go up 30. I mean, we wish we would. If we're homeowners, we wish it would. 35% a year would be pretty great, but it's just not really sustainable. So it's normal. You have a big run up in something, it's pretty typical that it tops out and maybe has a correction of some sort, comes back down to earth a little bit. And then the question is this going to then continue with a pretty strong uptrend? Are we going to bounce around sideways for a while? Or is there room for more correction where there might be better deals to have? So all things that are case by case. I believe in my advice, or anybody's advice, should take into consideration your circumstances, and we can't give blanket advice. There's people I know that purchased homes up here, and on the surface you might be like, oh man, they overpaid, and that's too bad. They didn't time it. They should have bought back here, or they could have waited and bought it here. But if you think about it, some of these people did lock in lower interest rates, so even though they paid a higher dollar amount, their payment might be quite a bit less because of the interest rates. And if they were to stay in that home for 30 years, you might be surprised to see that they end up paying less for the home because of the savings on the interest rate after all those years, versus somebody here who maybe buys the lower price but has the interest rate. Another strategy people are bringing up is, the lower prices. If we can take advantage of the lower prices and interest rates are a little bit higher right now, can we buy something now, be comfortable with the payment, but then be hopeful that the interest rates come back down and then an opportunity to refinance? That's another strategy also. So since we don't know what's going to happen, I like to lay out all the different scenarios for people so that you can make educated decisions and decide what you're comfortable with. And what I think is going to happen versus what you think is going to happen doesn't have to be in line. I'm certainly not always right, but if we look at the data, we can usually guess pretty well. But none of us have crystal balls, so that's how that's going to go. But past year and a half, almost 2 years, this has been the trend. Pretty sharp increase, a little bit of a correction, starting to come back up, but we're not sure where we're headed yet. And then over the last few years, so we're looking at 2019 to present, we can see how 2019 was a pretty flat year, but trended up a little bit. And then we could see 2020 was a little bit more dramatic. We saw the prices climb and climb and then climb. And then that's basically when we started to deal with the COVID stuff. And then once we got out of that, I think there was a big rush for people to buy homes. So I don't know exactly what caused it, but my theory is people got locked up in their homes, had to quarantine and stay home and do whatever. And they maybe realized that, hey, you know what? I don't have an area in my home for homeschooling. I don't have a home office. My yard isn't big enough to entertain, if we have to go through this again. So I think a lot of people came out of that pandemic with a new list of needs of things that they didn't realize were important to them until something like that happens. But anyways, we went through this crazy run. Prices went up like crazy. And then 2022 came, and I think that's where we're seeing the tail end of that. People got to take a breather and calm down a little bit, and then the interest rates went up. So the combination of those things just really slowed things down, brought it back down to earth a little bit. And then here we are looking like we're going to maybe trend upwards again this year. So if you notice this month in March, the last couple years, we saw a rise. Don't know if that's going to happen this year. My other videos, I've been focusing on the number of homes on the market. So our available inventory has been quite low, about less than 2 months worth of inventory. But the activity of buyers has also been a little bit low. So we're not sure if, let's say, a bunch of buyers decide, hey, you know what, we got to make the move anyway. So now there's less inventory homes on the market and people are going to fight over them, and that could drive the prices up. Or we could see that sellers feel like they've got to sell, so now they flood the market with a few more homes. Buyer activity is still slow, and that might put pressure on the homes to values to come down a little bit. Or we could just see that like something like the interest rates, maybe the interest rates drop 1% or 1.5%, and then buyers, everybody that's been waiting, just decides to take off and go after things. So all things to watch, but that's just a pretty typical trend over the last few years, and we can use history to sort of guide our decisions for the future. And then units sold over the last little while, last few years also. So the one that always jumps out at me is this purple one, 2020. So things were going well, COVID lockdown, boom, everything slows down. Buyers don't know if they should buy. Sellers don't know if they should list their homes. They don't know if they want people in their homes. We really just didn't know what to do. So things just kind of shut down for a couple months and activity really shut down. And then the lockdowns were lifted and boom, right back up activity. And that's kind of where that idea of pent up demand where people have to buy and sell. I mean, your family grows, your family shrinks, you get job transfers, just things happen in life where it requires a little bit of a different living situation. And that happens every few years. I mean, some people it's every 2-3 years, some people it's every 10-15 years, but it happens. And when we have periods of time, even this short couple of months where people maybe want to move and they don't, and then new needs are created. Like I mentioned, we need homeschooling space. We need a home office space. We need more yard. We need a pool, whatever those needs are. And then we get the green light to move forward again. And then boom, the pent up demand pushes prices and activity up. So I'm kind of in the camp of this maybe being the case right now also. So if we're looking at 22 with interest rates being higher, people have slowed down, and you can see the activity actually got all the way back down to the COVID levels, lockdown levels, and we've been there for a few months and even lower in January. So to me, that feels like pent-up demand. It feels like pressure building, and things can potentially explode if the circumstances are right. So I don't know. I don't know if I can see the prices going up super dramatically, but at the same time, this makes me think that that's a possibility. But then also, if the sellers do flood the market and interest rates remain high, there still is that possibility that prices drop a little bit further. So, anyways, like I said, case by case, and we're just trying to interpret this data and make educated guesses. And then the last chart I'll get over with you here is a longer term price chart. So if we're looking at the median price chart and going all the way back to 2006, we can see this is really the previous boom in real estate when Las Vegas really got on the map, became a popular place to live, and things started to happen here. And then the market, financial crisis, everything hit. People started to lose their homes, foreclosures, short sales, all that fun stuff. And then we went down pretty dramatically and pretty fast. So you can see we had the first leg of this, then kind of a gradual downward trend still. And we bottomed out really the beginning of 2012. And then we started our climb. So from there, you can see prices went up and up and up and up and a little bit flat and up and a little bit flat and up. And then we really kind of blew the roof off this thing this past couple years, getting up into this, 450 range basically. And like I said, it's just really tough for something like this to be so dramatic and sustainable. So we've had that correction. We've had the last couple months where it's ticked back up, and now we're going to be just watching to see what happens. And some of us are going to be buying and selling right now in this market, and then some of us are going to be buying and selling in the future. Some of us are going to wish we bought and sold now. Some of us are going to wish we bought and sold in the future. It's just going to be life. That's how it goes. So the one thing I kind of find interesting about this chart, especially now, is if we look at this line down here, we can see it's been a pretty steady growth. And then we really kind of made this dramatic move upwards. But if we were to draw a straight line from here to here, it's almost like we had this little spike and then came back down to where we maybe should be on a more sustainable trend up. That doesn't mean we're not going to go back down. That doesn't mean we're not going to just go sideways. But just to me, that line looks like, if we were reading charts for a stock or something like that, that would be something we would be considering. And we would be looking to see what happens. Now, real estate doesn't move like a stock. It doesn't bounce up and down every day. It doesn't bounce dramatically over the course of a month. It's usually like a slower rolling type thing. But the foundation and fundamentals of charts still has some role in that. So I just think that's something to keep an eye on. And, there's always, you can always time things better. You can always, put things off. You never feel like you're ready. You wish you would have done something in the past. You wish you didn't do something. So I just think home ownership is such a personal decision for people, and it's such a security, having your own place, having a fixed rate and a fixed mortgage so that you can budget properly. I just think there's so many pros to buying a home and owning it versus, trying to time the market too much and being at the mercy of a landlord and inflation and rental rates and whatever else and moving expenses every couple of years. So I think those are all things to consider. And hopefully this information has been a little bit helpful. I just want you to know what I kind of base my suggestions on and the information I use when I'm working with buyers and sellers, just depending on what their goals are and what we might want to keep an eye on. So anyways, that's basically all I've got today. You'll see this chart again next month, and you can also check out my weekly reports that I do, just keeping a closer look on the trends. And if you like what you see, go ahead and drop a comment and like and subscribe and whatever else you do on these things. And I'll see you next time. Thanks so much.